Well, while it's been a wild week for Bitcoin, Tim has the one chart that really stood out to him this week. It is called our chart of the week.
Here we go. All right, so Mel, we're talking about the chart of the week, and I'm talking about the 10-year Treasury yield. And the reason why this is the chart of the week is because between the fear on a trade deal, between maybe some bad data and jobless claims, we started to get to that place where yields tested kind of the bottom end of a range. But if you look at this is a 6-month chart, but if you look at where we are off those lows that were set September 3rd, we've actually held, at least this week, what I think is the bottom end of an up trend line. What does that mean? It means that yields are going higher for a couple different reasons. Ultimately, I think that's equity positive. But again, yields may be going higher, one, because I think global central banks are believing, or certainly tired of believing, in the efficacy of low interest rates. Bank of Japan, who I think is the ultimate culprit here, I think has been going out of their way to let you know they want to see yields go higher. I think what that means for equities is the industrials trade, the rotation that we've seen into more both cyclical and then even commodities, which I think are starting to base. This is a very good sign. It doesn't mean we're going to run away from here. But it means it looked like at one point this week this chart was going to break down, and it looked like we were going to test lowers, and we were actually going to be in some trouble, which would have been bad for equities. Yeah, you look at the TLT. Conversely, I mean that's the way to play this. Obviously, I understand what Tim is saying. My pushback would be, you've seen that move down to 135. We've bounced. Yeah, the last couple of days sort of squishy. I'm in the camp, though. I think yields are headed back lower. I think we're going to retest those lows at 147 yield, or basically 148 or so in the TLT. I think the TLT rallies from here.
So that's interesting. I mean, for equity investors, you actually kind of want to root for a range-bound trade at this point in time, because too low implies the economy is getting slower, and too high, we know, starts to have that reallocation away from equities into bonds. So I think bonds at these levels, you root for them just kind of staying right here, maybe moving up a little bit in rates, but not much.